Welcome back, everyone, to the Audacious Money Witch channel, where we talk about the magic behind the stock market. Hey, y'all! Grab a sweet tea and get comfy, because we're fixin' to talk about something everyone's whispering about. NVDA. I mean, bless its heart. This company is worth more than like a whole entire country now. But a little birdie told me some things are maybe not sunny. Did you know an MIT report just came out and said 95% of these big-time generative AI projects are failing? Y'all, that's like trying to bake a 5-layer cake and only one of them comes out right. If you think we're not in a bit of an AI bubble right now, you can just leave right now and go buy some Palantir stock. This ain't for you. But if you're ready for some real talk, let's get into the risks of holding NVIDIA stock in 2025. Risk number 1, a glimmer of green. But what's underneath? Now let's look at the numbers for a minute. Wall Street, bless their hearts, reckons NVIDIA's revenue is going to hit around $46 billion, up a whopping 53% from last year, and earnings per share are looking good too, at 101. So on the surface, it looks like the whole lot of winning. A big part of that is their fancy new Blackwell product series, which is flying off the shelves for all those data centers. But honey, even with all that good news, there are some clouds gathering. That growth is a little slower than it used to be. And the company's still dealing with some supply chain headaches and a few customers who are a bit cautious about how much they're spending. Analysts are going to be watching like hawks to see what the company says about whether demand from the big dogs like Microsoft, Amazon, and Google is gonna hold up. Risk number 2, a house full of competitors. Now, NVIDIA's been the big dog in this whole AI yard for a while, but honey, they've got more frenemies than a high school reunion. It ain't just AMD and Intel anymore. Their own best companies, like Microsoft, Amazon, and Google, are cooking up their own custom chips. You all know what that means, right? It's like your best customer comes to your bakery and learns your secret recipe so they can open up their own shop next door. So while NVIDIA's gross margin is still a high-class act, a decline is not a good look when the whole company is worth more than $4 trillion. It's a sign that their secret recipe might not be so secret for much longer. Risk number 3, Uncle Sam is a buzzkill. Y'all, this one is a big old spoonful of country fried drama. On January 15th, Uncle Sam, bless his heart, put out this new rule called AI diffusion, IFR. Now, that's a fancy name for basically saying, NVIDIA, you can't sell your very best chips to China or a bunch of other places. And y'all, an analyst at Piper Sandler, a real smart fella, said the guidance on China will be the focal point of this whole report. That means the market is sitting on the edge of its seat to see what NVIDIA says. Any clear update from NVIDIA on whether they can sell there again could totally affect their stock and the whole tech world. This isn't just about losing a market, this is about being cut off from a huge chunk of their business, and it could leave them with a whole lot of unsold inventory. It's like you make a whole mess of sweet potato pies, but then half of the town decides they can't buy them. What are you going to do with all of those pies? It's a real deal problem, and given the geopolitical stuff going on in places like Taiwan and the Middle East, where they got a lot of operations, it's a risk that is fixin' to be worse. Risk number 4, spreading themselves a little thin. You know how we all have a little bit of y'all come back now, you hear? Attitude. Well, NVIDIA's got that with their new business ventures. They're all over the place. They're trying to get into cloud services with NVIDIA, DGX Cloud, and they're trying to sell software too. It's like they're a chicken with its head cut off, running in every direction at once. The problem is these new ventures cost a ton of money and might not bring in any revenue for years. Getting new customers or design wins in their fancy talk is a long process that ain't guaranteed. It's like starting a side hustle for fun and a bunch of new side hustles to support that side hustle. And if they mess up their demand predictions, and they have in the past, they can end up with a huge pile of unsold chips or not enough to go around. That'll hurt their wallet and their reputation. You hear? Risk number 5, money, honey. Now let's talk about the big one, money. When the economy gets a little tight, like when there's a recession or inflation, folks stop spending on big fancy tech. That's a huge problem for NVIDIA because a ton of their revenue, like 12% from just one customer, comes from a handful of big partners. It's like putting all your eggs in just a few baskets. If you drop one, you've lost a whole lot of your dinner. Plus, they've been spending a whole lot of money on investments and acquisitions. It's like buying a bunch of little farmhands, but you have no idea if they're going to be good at their job. And if they're not, that's a whole lot of money gone. The final vibe check. Look, NVIDIA is a powerful company, no doubt. But when you put all this together, the competition, the government's rules, the money they're pouring into new stuff, and all the economic risks, it's like a whole mess of challenges. So before you run out and put all of your money in this one stock, just sit with it for a minute. Ask yourself, is this what a company looks like at the tippy top of a bubble? Is this worth the risk? Let me know in the comments below what you think. And as always, y'all come back now, you hear?